Have you noticed that lately everything seems more expensive, but no one explains why? Governments say everything is under control. Central banks assure us inflation is going down. But then why do food, housing, and even basic services keep rising month after month? The answer is uncomfortable that we are living through the beginning of a silent global crisis. One that will not arrive with a big headline, but rather with a series of small economic hits that you will feel in your pocket without even noticing. Today, I'm going to show you why the world is entering a new economic era and what role the United States, Europe, and China play in it. Because while you are trying to make it to the end of the month, the big banks, investment funds, and governments of the world are rearranging the global economic board. Won't be easy for anyone. It all began with something that seemed like good news. Central banks started lowering interest rates. After nearly 2 years of historic increases to contain inflation, the Federal Reserve in the United States, the European Central Bank, and other banks around the world decided to change course. Headlines said, "Good news for the global economy. The era of expensive money is over." But behind that optimistic headline was a warning sign. When banks lower rates, they don't do it out of kindness or stability. They do it because the system is starting to show fatigue. Companies stop investing, consumers go into debt to the limit, and governments can no longer pay the interest on their own debt. So they lower rates to give oxygen. But what they are really doing is buying time. We are talking about a global economy based on debt. Countries owe more than $300 trillion combined. That number is so large it cannot even be imagined. And the worst part? It keeps growing every day. This means that much of the growth we see doesn't come from real productivity, but from artificially created money. A system that only works as long as everyone believes it can keep working. And history shows that never lasts forever. If you had to point to one single cause behind the major economic crises of the last 100 years, it would be this: debt. The United States has more debt than ever before in its history, over $34 trillion. To give you an idea, if you started counting from 1 to that number, it would take you over 1,000,000 years. Europe is not far behind. Italy, France, and Spain owe more than they produce in a year. And in Asia, China is facing a real estate crisis without precedent, with developers going bankrupt and families trapped in impossible mortgages. But why is this so serious? Because the entire system is designed so that debt is never paid back, only renewed. And that creates the illusion of stability, a house of cards that looks solid until the wind changes. Every time central banks print money or lower rates, what they do is push the problem into the future, and each generation ends up inheriting a weaker system than the previous one. That now the situation has reached a limit. Debt interest has become so large that governments are already spending more on interest payments than on health or education. In other words, countries are working just to keep their own debt alive. And when the cost of sustaining the system surpasses a country's ability to produce real wealth, history teaches us the result is always the same: crisis, inflation, or devaluation. All of this sounds distant. It seems like it only affects economists, governments, or big corporations. But no, macroeconomics always ends up at your doorstep. Because when a central bank prints more money, prices go up. And when rates go down, your savings lose real value. You see this every month when you go to the supermarket. A carton of eggs, a liter of milk, a kilo of meat, everything goes up. And even though governments say inflation is under control, ordinary people feel something different. Each month, money buys less. But the most dangerous part is the feeling of normality. People get used to it. They accept that everything is more expensive without understanding that what's really happening is that their currency is worth less. And while the average person struggles to get by, financial markets keep growing. The largest corporations pay record dividends, and central banks assure that the economy is doing well. The disconnect between the real economy and the financial economy has never been so large. And when that happens, history shows that something is about to break. And while most people are just trying to survive, the major global players are redesigning the rules of the game. China is pushing its digital yuan, a payment system that could partially replace the use of the dollar in international trade. Russia and the BRICS countries are promoting an alternative financial bloc. And the United States, seeing its hegemony threatened, is trying to maintain control of the global monetary system. The result is a silent currency war, a struggle for economic power not fought on battlefields, but in markets, interest rates, and trade agreements. Meanwhile, Europe is facing its own dilemma. It wants to maintain its influence, but is dealing with inflation, debt, and energy dependency that make it vulnerable that we are entering a stage where global economic power is fragmenting. For the first time in decades, the dollar is no longer unquestionable, and that means the coming years will be marked by volatility, adjustments, and deep changes in how money circulates. This isn't just about politics or geoeconomics. It's about a structural shift in trust. Because in the end, money is nothing more than that, trust. And when that trust is lost, the entire system can collapse. What can an ordinary person do in the face of all this? More than you think. First, don't ignore the signs. Don't wait for the news to say the crisis has begun to act. When central banks start moving, when governments take on more debt, those are already warning signs. Second, diversify. Don't put all your savings in one currency or in one type of asset. A good strategy is to keep some cash for emergencies, some intangible assets like gold, silver, or real estate, and another part in productive investments that generate cash flow, like businesses or index funds. Third, invest in knowledge, because information is the best tool to stay ahead. Understanding how interest rates, inflation, or markets work allows you to make rational decisions when everyone else is panicking. And lastly, stay calm. Crises don't last forever, but only those who are prepared emerge stronger. Every crisis begins the same way, with calm, with headlines saying everything is under control, and with a general feeling that nothing serious will happen. Until it happens, that's why this video doesn't aim to scare you, but to wake you up. Because history shows that moments of greatest risk are also moments of greatest opportunity. If you made it this far, congratulations, because you are already one step ahead. Subscribe to keep learning how to protect yourself, how to invest with a cool head, and how to take advantage of the cycles that are transforming the world. Because this time, history is repeating itself, but you can decide which side to be on.